So let's take this trade step by step and understand where each of the levels came from. The first level is this lower box of demand at 58.40 on the S&P future contracts, which came from the days prior area of consolidation. The market in the overnight session was finding support at this, and we were holding above this, forming a double bottom here, indicating that buyers were significant and strong, holding this level of support, and the market then was opening significantly much higher after bouncing off of this level. So in the pre-market plan, I post these every single day in the Discord. My main scenario was watching as long as the market holds above 58.40, that selling will be short-lived, and I only want to be playing longs for bullish moves targeting 5,900. So my idea was, as long as the market remains above this 58.40 level of demand, I want to play longs targeting 5,900, as 5,900 was a whole psychological number, along with a key level of resistance from a few months prior. 5,900 is the top red line. Now, my job as a trader is to identify if the buyers are actually strong when the market opens. That could give me a good clue and a good understanding of how volume is perceiving the prices that the market is trading at. The way I look at the market is it's a mechanism that is constantly spitting out information to us, and it's our job as intraday traders to use this information to our advantage and use the clues the market presents to us to take high quality trading setups. So because of the market bouncing off of this 58.40, I had to remain bullish. The market then opens up and I draw this level at 58.70. So you're going to hear on this live replay that I'm about to show you all, I explain that I'm watching 58.74 to 58.71. Now, before I show you that, I want to show where this level got developed and how it got drawn on my charts. There's some significant buying here at the 58.73s. I don't have any supply. I don't have any resistance till the 5900s. I'm really looking to get long here, 58.74 to 58.71s. I just need to see a quick little pullback into this. Here's the level of interest, 58.74, and here's the market pulling back where I got long 25 ES contracts at 58.74, placing my stop loss under the 58.70s. Now, where this came from, I'm going to show you two different charts and examples. The first, where this level came from, 58.75, we could see it on a heat map, was as the market was rallying up at the market open. Here we have 9:30, the market open. As we were rallying up, around 58.75 to 58.74, which is this area that I'm highlighting right here, there was some significant volume being transacted at this level. Now, if I were to zoom in even more, we could see a lot of selling volume as the market is rallying up. So zooming in here, we can see a lot of red bubbles, indicates that a lot of aggressive sellers were coming into the market and trying to bring it much lower. Now, this was a failed attempt to them because if there is a lot of selling volume, ideally the market should sell off and continue moving down. Now, pulling this up, this is a footprint chart. What we're going to see here is at 58.75, right here, 58.75, 58.74, we see a lot of red, which indicates more aggressive selling than there was buying at this range at the 58.74s, 58.75s. So now we have aggressive selling here, not bringing the market down. In fact, it is continuing to rally up despite all this aggressive selling. That's point number one. Point number two is we also have an area here of low volume. If you've all watched some of my most recent videos, this right here is a level of low volume at 58.74 to 58.71. So we have all the aggressive selling volume. Directly under this, we have the area of low volume. On top of all this, a few seconds later, the market dips down into 58.74 and we hold it very, very well. Now, this point of the market selling off aggressively and holding it gives me more validation that number one, we're holding this level of low volume, and number two, we're holding this level of aggressive selling. Now, what a lot of people are going to see here is they're going to see a lot of red and think this just means the market should come down. This is where context is important. Context is important is because if there's a lot of aggressive selling and the market cannot sell, it could be viewed as somebody passively buying this and a true buyer factored into the market, just being validated that a few minutes later, the market pulls back into this and is supported here at the 58.75s, 58.74s. And that was my validation, the pullback down here to get long at the 74s, placing my stop loss under this level of low volume at the 58.70 and a halfs, call it. And this is where I was able to catch the market long on the pullback into this level of interest. I'm long in this pullback, 58.74 and a half. My stop loss is going to be under 58.70, and I'm going for a 5900 target, which is this red line above. First, going to watch price action above these pre-market highs at the 58.86s. Strong break through that, maybe a good opportunity to scale out some. And then targeting 5,900. I don't really see much supply or resistance above. So the market's going to go break this pre-market high. 10 contracts here at the 58.86s. Out 10 contracts. I have 15 remaining, going for a 5,900 target. And I exit majority of this position above those pre-market highs, holding some runners. 10 more contracts here at 58.96. Only 3 points shy of the final target at 5,900. It's just getting a little heavy here, and I want to lock in some more. I'm holding 5 more contracts for a breakout above 5,900. And then the market goes, breaks 5,900, and I get all out of the trade on strength. You're going to see it right. I'm all out, 59.04. All out of this trade, 59.04. What a great trade. That was over a 5-to-1 risk to reward ratio, simply longing the pullback down at the level of interest and taking profits into strength above our levels of supply and resistance. And showing you all the chart, there was the long entry. There was the break above the pre-market highs, which I got out 10 contracts. I've noticed recently in my trading, a lot of the times the market has been coming a few points shy of my target, or just my targets have been a little further out to brace for this volatility. And there's been some trades, like even yesterday, I took a trade. Look at this trade from yesterday, right? This trade from yesterday, I was up $14,000. That went to a break even on me because it missed my target by 2 points. And I've noticed that a lot recently, and this is me adjusting and adapting accordingly. So I scaled some out, especially that I was in with 25 contracts. I wanted to reduce my risk above these pre-market highs, held some more, and I felt like it was right before my target. Let me get out even more, because if it doesn't hit my target and we miss it by a point, I'm going to get too greedy if this thing pulls back on me. And then I just scaled out into strength and got all out of this trade. And these are my exits and these are my fills, which in the scheme of things, it was a good exit. Yes, I could still be holding this thing because as I'm recording this thing, the market is continuing to move up. But you have to look at, and this is a really good psychological tip, is that like no one knows where the market's going to go next. No one knows if it's going to blow past our target, hit our stop loss, we're going to win on it, lose on it. No one knows this. The one thing that we can know and we can control is our risk, and if we follow our plan. My plan was to sell above 5,900. And what did I do? As the market broke above 5,900, I got all out of this trade. I've been in countless amounts of trades where I don't follow my plan or I don't sell at my target, and the market just destroys me. And it's not only not a good feeling emotionally, but at the end of the day, you're not going to have consistent success if you don't follow the plan. Like, why create a plan if you are not going to follow your plan? Why have a setup or why have a plan if you're not going to obey those rules or obey those setups? So I'm very pleased and happy with the trade today. As you can see here, when the market held all this heavy volume here at the 74, 75s, again, this dip right here was the area where I got long. And then directly after that, I mean, it was all green bubbles, all strong green buying volume out of this move. And another good sign is that if the market pulls back and on the pullbacks, there's aggressive selling. This just validates why I took the market long to begin with. If there's aggressive selling on pullbacks on an uptrending move, this is a very bullish indication and a very healthy sign for an uptrending market. And I kept noticing this on every dip today. And this is what gave me more conviction to hold for a breakout above the 5,900 whole psychological number. And that was what enabled me to hold on these runners a lot more and capitalize on this strong move up. And truthfully, we could even see it here, like on every pullback today. Look at all this aggressive selling. If there's a lot of aggressive selling, but the market's holding, it's a very good bullish indication of a market's auction on specifically an uptrending move. I think that's very crucial and very key to say. So that was my setup today. If you have any questions, let me know in the comments below. If you're new to my channel, hit that subscribe button. But I'm ending it. Peace out.